Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. I just wanted to update you again on my holdings and give you a little color on what I did today and what I may do tomorrow. There's two new recommendations I'm on the verge of initiating on, but with the market turbulence, I'm being very cautious in particular on when I do that. But let's get into this. I think hearing some of these things over a few times might help you with your trading. And that's the goal of this is that hopefully you learn something and get some good advice here. And first of all, the short on the S&P 500, trying to profit from the market going down. So I'm not going to spend a lot of time on this. I just did 2 days ago. And, the market was overbought. I'm bearish against 6,100. We got a big negative divergence down here as we've hit higher highs. We got lower highs on our relative strength index, flashing a caution sign that beware a change of trend could be coming. Let's take a look at just the last 6 or 7 months here. And so here we are. So 2 days ago, so that was on this big down day. And I said that, when the market is up on my short position, I buy more puts. I buy more shares of the inverse fund that's going to uh, appreciate when the market goes down. And so then the last time I talked to you was on this big down day. And what did I say I was doing? I was selling some of those puts that I had made money on. And so then yesterday we had a gap down and a big down day. What did I do? I sold some more of those puts. So I was probably down to about half of my position. And then today, sold a little bit more in the morning when the market was down a little bit, and then the market rallied. And so I bought a small amount on the close, of those puts that would appreciate if the market goes back down. But I'm kind of expecting a test uh, of this rainbow convergence, a cluster of these moving averages. So it wouldn't be surprising to me to see a pretty good up day in the morning, and then I would try to sell against that. I would buy against that. I would buy the inverse funds. So my inverse funds will be down on the open if the market opens up, and then I'll buy more at a cheaper price, and then hopefully it'll go back down. So really, the level I'm looking at is about 6,025 or so. So it's right in here, maybe 6,050 to be on the safe side, so I don't get whipsawed. So that's the thought process here. I do think the market's going to have some pretty ugly days. And for a lot of different reasons, not because of the trade wars and all that. I'm sure that doesn't help, but just really the negative divergence we saw on the last chart. So right now, I probably got 6%, maybe 7% of my entire portfolio short the S&P 500. Exelon, the utility company. When we talked the last time, it was up. It was see this last bar, this candlestick, the last one. This is a weekly bar, and so when we talked 2 days ago, prices were way up near 45, and I said, what are we doing when we get up days? We sell into those. So each one of these, each day, I'm selling a little bit, I'm selling a little bit. And now we've had a couple of down days. And so I bought a little bit back today. I'm not buying this aggressively at this point because my price projection is 51 and we were all the way up to 45. So it's not as attractive to me as it was down here on the initial breakout. But I still have a good amount in, probably 4% of my portfolio, maybe in this particular security, maybe three. So, what was I doing today? When the market was way up, I was looking at Exxon because it was down a little bit. So I was buying a little bit of that. What else was I buying or selling? How about China, large cap? It was up 5% on the day. When we talked, it was down here. It had like 3 or 4 down days. And I said, I would be selling something else and I would be buying some of China because what do I do on all these up bars? I'm selling, I'm selling, I'm selling small increments because I still like China long term. I think that the big picture, which I haven't shown in a while, but I will, maybe in the next one, there's potentially some really huge upside in China. But when it's on red, when you don't, people are chasing the video or whatever, I'm looking at things that are down, but things that are down within a bullish trend. And China was that, and I got rewarded today. So what did I do on the close? I was selling some. Um, I see the futures. It looks like China may open up again tomorrow. So what will I do? I'll sell a little bit more. So, why I'm selling a little bit, it's really mostly the appreciation that I have accumulated. When something's up 5%, you sell, a few shares and, it may not even be the accumulation that you made that day. So anyway, I was buying China the last couple of days and I was selling some today. Saudi Arabia. So this was my latest recommendation and I bought it on the breakout and now it's come down. And when I was on the third, that was a couple days ago, I said I wouldn't be surprised to see Saudi Arabia have a couple more down days. And first of all, just to look at this big symmetrical triangle, the price projection, if it can maintain uh, hold in here is about 54, which is a big, big move. So, um, why did I think it was going to be down a couple more days? Let's take a closer look at this short time period. And here we are. Remember, I talked about a rainbow convergence, and these lines were coming together, but they weren't there yet. And I believe prices were maybe here. And I said I wouldn't be surprised to see a couple more down days. So we got those couple more down days. We're getting oversold. We're down below 30. But more importantly, this convergence has come together. So now prices can sit here. Usually, prices will, a type 1 convergence, prices will sit here until these moving averages move down. And then we'll see what happens, or a type 2 convergence, which seems to happen more often than not. Prices will retrace towards this bearish rainbow convergence, meaning that prices, if they come up to this and they can't get through, then it promises a new low. So what am I doing when these things are going down like this? Yep, I'm buying small increments. I'm trying to build my position. Now, if we get a type 2 convergence and prices come back to 41.4, whatever, 41.6, and they can't break through, I'll be selling a lot of Saudi Arabia. But if it comes back up here and then breaks through, it's going to be put this much bigger pattern in play, and we could see some really big upside. The weakness in oil, crude oil, has definitely affected this, but we'll see what happens. I just look at the chart. I try to look at it without a name on it, and I make my determination. So, yeah, I was selling some China, buying Saudi Arabia. This is just a point and figure chart. We got a bullish trend line. We've got a $59 price projection based on our point and figure chart. So nothing's changed. Okay, here's the fixed income, IEF, the 10-year treasury. And so we bought back down here and prices went up, meaning that rates were falling, which was a surprise to Wall Street, those dummies. And you can see that the last couple of days we've had a little bit of a pullback since we've spoken. And if you remember, I said, this is getting overbought. So anyway, this inverse head and shoulders pattern here, it's like a man or woman hanging upside down, left shoulder, head, right shoulder, neckline. We broke out. The price projection based on this pattern is 103. We're currently at 94.50. So again, this is a really good diversification tool for your portfolio because this has been going up while the market has been going down. I just got my cash dividend on this, and it really is nice. Um, but short term on the call 2 days ago, I said, I wouldn't be surprised to see a little bit of a pullback. So what have I been doing as these white bars have been going up? I've been selling a little bit. Let's just take a look at this on a daily chart so we can see exactly what happened. But remember, the bigger picture is 103. And I probably have mm, 20% in all different maturities from the 7 to 10 year treasury to the 2 year treasury to the 5 year treasury to the 20 year treasury, the tips, etc. And so let's just take a look at this right here. I said, this is getting extended. You want to be selling some into this. And the next day after my video, we had an up opening, which I sold a little bit more in, and then prices started to go down. So today I bought a very small amount of IEF back today, and the reason is this gap here. A lot of times gaps will be filled, so I'm reluctant to buy this as big as I would normally. I just kind of nibbled at it today. And you can see we got overbought here. And we had a pretty big down volume day today. But anyway, if it's down tomorrow, again, I'll nibble at it. I'll nibble at it. If I see this get filled at some point, then I will be more aggressive in my buying. So anyway, again, that's why I like to do this. You make more money and you have less risk. And so it's a good thing. Silver. Uh, Silver was down the last time we talked. It had been down a couple of days, nothing dramatic, but it was down a little bit. And I said, this might be a good time to buy a little bit of silver and a little bit of copper, which I'll talk about next. But this is the big pattern. And this is suggesting I believe that's a $64 price projection, and we're at uh, about 30. So, more than a double. This is big, and if it happens, and that's an if, nothing's for certain, but that's where we're at there. We were buying the last couple of days, and I think here's a daily chart. So uh, we talked on Tuesday, so that would have been this day, and you can see we were down off our high. I said, I'd be buying some of this. Or actually, it was here. Okay, so yeah, and well, one of these two. Anyway, we added to our position, and now you can see we had a big update today. We're nowhere near being overbought. This was on good volume today. I expect to see this go higher. Oops. So I sold a little bit today, very little amount, and tomorrow if it's up again, I'll be selling a little bit more. Copper, this is another monster. So there's a big pattern going back to 2009. These are gigantic. Haven't seen many of these in my career, and trust me, I'm old. So this big ascending triangle. Here's a support line. Here's a resistance. It is being challenged today, 479, and this line is at 475. So if it can clear this, it suggests an $8 price projection, which is huge. Now, this was a triangle that got me involved. I didn't want to wait to get up here, but I needed something to hang my hat on where I knew my reward to risk. And so here's a triangle that I identified. Let's take a look. I think I got this. Only I got this on the actual ETF. This is the copper futures. Now we're going to look at the ETF that you can buy like you buy a stock. And here it is. This was the breakout. This promises a $34 price projection. And when we talked a week ago, I said, we're hitting resistance. I wouldn't be surprised to see this come down. Now, remember, what do we do on like big weeks like this? And we sell, we sell, we sell. And then we get a pullback. We're buying, buying, buying those shares back. And then this week we've kind of had a mixed bag, but actually today it was up like 5%. So this looks good. And on the ETF, if it breaks out of say 30, 30, 50, our price projection is 41, 42. So again, these are big numbers. And I know it's hard for people to own commodities, but it really isn't. You can buy these ETFs. And you should have 5% of your, if you've never bought commodities, you should have 5% of your portfolio minimum in commodities because they go different directions than stocks. And so, like fixed income, it gives you more diversification. Oh, let's see. Oh, huh, what's the difference? Oh, this was it the last time we talked. Okay, yeah, this was on the third, 2 days ago. So you can see it was down to 28.57. So we were buying, and then today up almost 6%. And so what was I doing today? I was just selling a little bit. I mean, the potential here is so big, I don't want to sell too much, but I follow my discipline and I sell some. And here's platinum. This is at the bottom of my buy recommendations at this point, just because it's been quietly consolidating and building momentum. The bears and the bulls are fighting this one out. And if it's able to break above this resistance line, it's going to go a heck of a way higher. And so I've shown you the shorter term chart on this, but and last but not least, my cash alternative. So, this is where I put my cash. So I probably have 35, 40% of my portfolio in 3 month T-bills in the ETF, TBIL. So I can sell and buy it whenever I want. And I can take the money out and buy stocks or buy commodities or buy whatever I want. But again, I just got a dividend on this and it was really, really big and it was nice. Now I heard it's down to about a 4.75 dividend yield. So because it's appreciated a little bit, and I'm glad these aren't big appreciations, I want something steady. This fits the bill for me. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Tell your friends. I see a lot of investment channels out there that say, the trade wars are going to do this, it's going to do that, it's going to do this, but do they really give you anything that you make money in? I think these have been pretty solid. Thank you. You have a great evening. Good trading to you tomorrow, and I'll be in touch. Adios.